welcome to Pro Trader Strategies Market Commentary for Wednesday, January the 6th. So you say it's your birthday. It's my birthday too. Yes, it is my birthday. Fun fact, it is Joe Kernan from CNBC's birthday as well, so a little shout out to him. Yeah, and you might recognize me from mainstream media like CNBC, where I used to talk about economic data, the geopolitical environment, and how that all comes in to impact the markets with some of my market analysis. I do the same thing for you folks out there in these daily market commentaries, but I'm going to go a little bit further and talk about option strategies that I'm putting into my portfolio on any given day based on the assumptions I come up with. Now, for you folks, I've streamlined that process in order to find the optimal strategy for you folks, given your directional assumption that you come up with. We aren't just picking option strategies out of a hat here at Pro Trader Strategies. No, what we look at is your risk parameters, what's going on in the underlying, and find the optimal strategy for that given assumption. It's not, like I said, just doing a long call for a bullish assumption. No, what we do is we dig down into the devil of the details and find the best strategy for that assumption. And we're going to talk about a perfect example from yesterday coming into today, where I was catching falling knives and then today just zinging them out. All right. Anyway, a little bit of pat on the back for my birthday today. Sorry. But anyway, without further ado, let's get on with the economic data, see how that's impacting the markets. One thing we talked about yesterday, OPEC meeting. Yes, they are looking to be cutting some production there. Also, we got some oil inventory numbers here today, probably driving this market as well. We're back up into that 50 handle, which I wanted to avoid at all costs. Why? Because that's going to hurt velocity of money. And we're going to talk about a lot about velocity of money today. Not only here in crude oil, but a lot of things moving in the markets that could slow some of that velocity of money going forward and some certain sectors. But across the pond, let's talk about some final PMI numbers. Purchasing Managers Index, this is for the Spanish PMI service sector. We got 48.0, higher than the expected original 44.5. Now remember, we did get some preliminary numbers, and these are the final readings here. And then Italian PMI for the service sector. Purchasing Managers forward looking. Remember, anything above 50 expansion, anything below 50 is contraction, which all of these were pretty close to being below, if not below 50, and continued. But Italian services PMI revised down to 39.7, expected to be 45. German services 47 versus 47.7. So not huge misses there across the pond. Pretty much in line with what the original numbers were. Not a huge miss anywhere that I can see there. So we'll just move on to here in the United States. We got our final services PMI coming in at 54.8. It was originally 55.2, so just a slight revision. Factory orders coming in at 1%, expected to be a 0.7%, so a nice beat on that number, also a revision to last month's number. And finally, we got the crude oil inventories coming in at a drawdown of 8 million barrels, expected to be a drawdown of 2.8 million barrels. And on top of it, remember, we had the OPEC meetings. It looks like they're going to try and cut production there. And we also have the FOMC meeting minutes today. So a little bit of insight. A lot of these Fed governors have been talking, so we've already got a pretty good idea there. Yes, I have adjusted some of my lighting here. Trying to get rid of that glare. Lisa reached out to me. Could you try to do something about the glare? Well, I'm trying. And I'm not a videographer. I'm just a guy that sits at home at his home office, and I'm trying to make it enjoyable for you. So hopefully this helps some of that aspect there. I'll play around with it a little bit more as we go along. I just haven't been able to nail that down just quite yet. All right, finally, let's move on to the overall markets. Crude oil, moving a little bit higher here into the 50 handle. We talked about that. Now gas prices are going to go up. That's going to cause people to lose about maybe $5, $7 per fill up, right? And if you're filling up once a week, that basically ends up being, $30 a month or so, sometimes, $30 to $40 a month, right? Well, With that being said, that's $30 to $40 that every single person that's filling up their tank can't spend elsewhere in the economy. That's where I'm talking about the slowing down of velocity of money. That's huge. If you think about everybody who is driving and spending more money to put into the gas tank, that could be spent elsewhere, and it's not going to happen now. Another thing we're seeing with, we talked about crude oil, so let's just get rid of it. Gold futures, they are coming off. A lot of the commodity sector, and as a matter of fact, I was expecting gold to really start making a bigger move to the upside today, as we're seeing the commodities across the board moving higher, being gold, lumber, what was I thinking? Gold, lumber, crude oil. All of those things are moving higher today. Well, Bitcoin even just blasting off. That's because we're seeing this weakening of the dollar, and I would have expected something like gold to hold up a little bit better than what it's doing right now. But that is starting to fall. We also have interest rates moving a little bit higher today as the bonds are coming off quite dramatically, down over 2.5 points on the day. That means interest rates are moving higher. Now think about all of these things coming together. You got to spend a little bit more on your gas. That's going to slow down. Also, interest rates moving higher with home prices at historical high. The median home price is right around $320,000. That means that the person that was looking for a house, interest rates have moved for the 10-year above 1%. That means your interest rate to buy a home is moving much higher, okay? If that is moving higher, you can only afford a smaller house or can't afford to pay the price tag for the house that you might have been looking at a month or so ago, all right? So all of those things being said, that means that maybe this housing boom or this frothiness in the housing market is going to start slowing down just a bit. So I would, if I were an investor, start looking to rotate out of any home builders or anything like that, anything related to that home construction or new homes, and rolling into something where it is more like a Home Depot or a home improvement type of store. Why? Because people just got some checks in the mail from the stimulus check. We saw the last time that because a lot of people are staying at home, they're refreshing their home, or they were looking for new homes, or something like that, where I don't think the new home is going to be a driver as much as probably people doing stuff to their existing home at this point. Now, moving on to the overall markets, let's talk about the equity markets. We see bonds moving lower, which means the interest rates are moving higher. Volatility coming off quite a bit again today, as the last couple of days we got those moves. I talked about the SPY trade I put on because I just wanted to take advantage of high volatility, and we'll talk about that here a little bit more in detail as we go through these equities. You can see all-time high here in the Dow Jones Industrial Average. If I break this down to the 15-minute chart, let's call it, you can see that was printed intraday. That's a good thing. That is chartable then, in a sense, for some of the old school guys. Here we have the NASDAQ just moving a little bit lower on the day, down about 23 points, but a big move off of the bouncing low there, as we saw a lot of people moving. Sector rotation still happening out of that tech sector a little bit and into some of these other blue chip and undervalued stocks that we're seeing here. As we can see with the E-mini S&Ps, hasn't quite printed this overnight low yet, but we are very close, within single digits of creating that. I believe we'll probably go up there and at least try and print that during the day session. And then the breakdown of the E-mini S&Ps, you can see we're just coming up shy of that overnight high. They really want to print that. And like I said, I think that we're going to probably be able to get up there to get to that point. Now, let's look at the trades that I've done. SPY, remember just yesterday, it was just yesterday that I put this trade on in the SPY. We can see that the market has come off of those lows, but the thing I want to talk about is this volatility crush that we saw happen from yesterday till today. Now, this is what I was saying yesterday. I feel like I got to take advantage of this volatility spike. And what does that mean? When volatility spiked, it is one of the biggest drivers in that fluctuation in the pricing of options. All right. And I went into the 10-day to take advantage, 10 days to expiration, to take advantage of that volatility crush that we would see happening there. And with that being said, I got out of my 135 puts. And now what I did is sold the 135 puts yesterday with that volatility. You can see it was quite a bit higher yesterday. And when I put it on, it was probably around 43 or something like that. I can't remember exactly where the volatility was, but you can see I got about 20 points coming out of volatility. Now, volatility, when we're looking at it on a, let me just pull this over here. Let's pull this over here. This is the SPY platform, right? Now, yesterday I sold the 145 puts here. And with that, I sold the January 135, or sorry, I keep doing that because I sold the 135, but I sold the 345 puts in there originally for about $1.35. And today, that volatility coming out, directional move, yes, that helped. I got $5 in my favor from where I put this on, probably a little bit better than that. Well, $5 on these, that's only 20 cents coming out of this pricing, right? Because for Delta tells us for every dollar move, which the assumption is moving higher, for every dollar move higher in the underlying, our premiums are going to be affected by that. Now, I did this when it was about a 12 or 14 Delta, right? So that first dollar I lost 14 cents, but we talk about how all of that comes together. But we could say that, let's just say I did it for about 8 cents. That's only still 40 cents coming out of this underlying where I had originally sold it about $1 higher, right? The volatility crush coming out of this underlying is about $1, okay? Now, yes, you could say $1 and then 20 cents or something like that. Well, all of that being said, it should be almost zero. Well, the volatility drop in this particular expiration cycle didn't drop quite that much, but it did get me out for about 70 cents. That whole move down in volatility helped me that way. So the directional move wasn't the catalyst for really getting me to the point of being able to get out of this for a very nice profit. It was that volatility crush that we saw in the chart there. So I was able to get out of these, and I paid up for 32 cents on those. I think it's going to be a much better trade a little bit further down the road here on the day. But that being said, I'm out of my SPY. Like I said, Jan 345 puts I sold for $1.35, and I bought them back today for 32 cents. So a nice win. Another thing I was really teetering on, one of my goals for 2021 is increase my tranche size. I didn't do it with this one. I did it with my original tranche size. But that is a goal for me this year, is to increase my quantity that I am trading with, all right? So if you're used to doing, say, a 3 lot, I would be moving up to a 5 lot, let's say. 10 lot, maybe a 15 lot or something like that. I'm trying to increase my size. I'm not trying to double it right away. I'm just trying to slowly, incrementally increase that size that I am trading with to get more comfortable with it. So I can stay mechanical, not get emotional about the money aspect, which all of us do when we're trading. And it's hard to separate those two. Once you can separate those two, you know that you will be a much better trader. I can guarantee you one thing, and that is if you are allocating your money evenly and not getting overly zealous and increasing your tranche size too quickly, that will help you stay mechanical. So slowly, one thing I always say, if you've done well the year before, slowly increase that tranche size, which is also increasing your risk parameter, but it's also getting you more comfortable taking on a little bit more risk. So that's something that I'm trying to do. You need to self-evaluate how you did last year and whether or not you're willing to take that next step. But that is something that I've made a decision to do going forward into 2021. So that was a nice trade there. Something else I wanted to talk about with a couple of other underlyings is IBM making a big move to the upside. I am going to be looking to add more covered calls to this. Remember, I took off my covered calls earlier on. I'm long this underlying at 120. If it gets up here right around 135, that's where I'm going to be looking to start selling some covered calls. Right now, I don't want to get involved in next month's option expiration because there is a earnings event in there. I was looking at the 9 days to expiration in these Januaries, and I'm just looking at basically selling 135 calls in there for about 50 cents. I would like to move my covered calls a little bit higher to lower my overall cost basis. So I'm really looking at that 140 short call to do this as a covered trade. It's not quite there yet. I'm a little bit further away at this point. PENN making a nice big move to the upside again today. Why? Because basically New York and a lot of these other states that aren't really very open to having online gaming in their states or anything like that. Well, New York is talking about, hey, we are in need of some serious tax dollars. We might have to allow online gaming in New York, and that will help us out with our bottom line. Well, that's huge for all of these gaming stocks, right? Well, PENN being a big online gaming company now, especially with the addition of Barstool Sports, is going to do very well from that. I still have on my long PENN. I haven't done any extra covered calls in that. Again, why? Because the 9 days to expiration, I'm going to be selling covered calls very close to where this underlying is trading. And I don't want to get involved in covered calls around that earnings because I think that they're going to knock it out of the park again this year or this quarter on their earnings trades. And that's all I've got going on right now. Keeping my eyes out there for anything that I could do that will try and help me out here. I will be playing around with the lighting a little bit more. I know I've got a little bit of a shadow going on over here. Not super bright. I was expecting my skylight to give me some light and crossing, and hopefully I've gotten at least a little bit more of that glare taken away. All right, that's all I got for you guys. Other than we do have to talk about our disclaimer, so please take a moment to go over that as there are risks involved in trading, and you need to know your risk parameters and the risk you're taking on. Check out our webinars because we talk about all of that stuff in there and give you a little bit more detail as to what we're talking about with this volatility crush that I just took advantage of in this SPY trade going forward so that you know, like a bullish assumption, we're not just picking an option strategy out of the hat like a long call. That would have been the wrong strategy to put on around this bullish move. Why? Because that volatility crush probably would have completely countered my directional move that I got in SPY. So they would have all offset, and I'd probably be looking at a scratch right now on that trade rather than taking a profit by selling some puts. All right, so anyway, that's all I got. I hope you guys have a wonderful day, and if you can't take that, take it easy.